Hey traders, welcome to Charts and Coffee. Hope everyone's doing well. I'm rocking a new coffee today. It's Robusto. I keep forgetting I like Robusto cigars and Robusto coffee. I can't remember at this point. But it's a oh gosh, Vietnamese blend. Really good. It's supposed to be more caffeine. Don't know if I'm feeling that yet, but be warned, new coffee, maybe more caffeine. All right. Hope everyone's doing well. Great to see you all. Let's get right to it. What is going on that 5 minute chart? That would be Mr. Kapowell doing his Kapowell thing. A lot of weakness coming into this 9 a.m. event. So, first off, what the heck is this 9 a.m. event even about? Other than the fact that we can see that Powell is on the schedule. All right, so let's take a look. Open it up. So this is Forex Factory, by the way. If you've never checked out Forex Factory, highly recommend it. It's a great global calendar. It's not going to give us earnings, but we can use Estimize for that. So great global calendar. Due to participate in a panel discussion titled Central Bank Independence and the Mandate, Evolving Views. Evolving Views. Oh, we're in trouble. So he's in Stockholm. He's in Sweden. All central banks have one mandate. What's a mandate, Rog? What is this? What are they hoping to uh, help improve or influence some positive change on? Every central bank wants higher inflation. Every G7, G8 central bank wants higher inflation and, frankly, some wage growth. The US central bank has a dual mandate in that they want jobs and the inflation rate at their target. And that's it. So if they have evolving views, ooh, that could be interesting. Nonetheless, we're going to measure that in two places. One, what is the initial reaction on the charts? And specifically, what's the initial reaction in the ES? You can see it's moving higher. Let's use the 6E as frankly the best proxy for the dollar. The dollar index or dollar basket is actually not the best way to look at the dollar. The euro is, because most of that basket is the euro. It's well over half euro. So if you wanted the cleanest view of the dollar with a negative or inverse correlation, euro moving higher is dollar moving lower. It's that clean, it's that easy, and it's a very accessible futures symbol. So rather than using DXY or UUP, which is far inferior to 6E, use 6E, and this is going to give you more of a 24-hour view of what's going on with the dollar. The last place we're going to check is the ZB. What's going on with yields? You want to see yields moving higher. So I'm going to check the charts out first, doing pretty much what I would expect markets to do. Markets meaning S&P down as, euro, bonds, if we're expecting yields to continue to move higher or lower, right? In this case, yields moving lower. As well, let's see, what is the situation with that May meeting? Where are we sitting? Still between 4.75% to 5%. That is very much within where we have been in terms of expectation for that peak rate. And you can see. Now, the next question is, how soon or not do we start to see any kind of rate cut? That is still November, gang. That is, and it's not a probability, it's a possibility. And that is still November. All right. So there you go. Now we're expecting Powell to speak. We don't know what time he's going to say anything. I don't even know if he said anything yet. That's beside the point, right? We want to make sure that we're aware that this is when. Let's see. Oh, here we go. Fed's Powell. Fed must reset temptation to broaden its scope to address other important social issues, says taking on such goals would undermine our independence, says we are not and will not be a climate policy maker. Now, remember, he's speaking in Sweden. That's his comment. Fed should not wander off to pursue perceived social benefits, not tightly linked to the mandate. What is the mandate? Inflation and jobs. Fed Powell does not comment on current U.S. economic or monetary policy outlook in prepared remarks for Sweden's blah, blah, blah. All right. So there you go. There you go. I don't know if that's a reason to rally, but that's the initial reaction there. So that's what we've got going on with the Federal Reserve this morning, likely going to set the tone for today. I believe most of what we saw Tuesday was in some way concerned about what was going to result from today's discussion. We'll see what happens. It's still very, very early. It's only six after 9 Eastern. All right, so let's do this. First of all, I love keeping my little clock on the screen here. So let's put that there. And then let's jump into your questions. All right. So we're going to jump into that and let's do it. All right. Here we go. When futures day trading indices, hey there, Alex, on a 2 and 5. It's 5 primarily, 2 in certain circumstances after a large candle. If you miss my entry, but trend is so strong, will I enter late or wait? You mean, will I accept an inferior fill outside of my zone? No, my friend. Great question. No, my friend. I will wait for them. So this is my analogy. And this is the best analogy I have. This is absolutely borrowed from Grandpa Buffett right there. It's either in the zone or it's not. And it's just that simple for me. I don't waver from that at all. It's either in the zone or it's not. So entering late means it's not in the zone. And what happens when it's not in the zone? My probability for making, in this case, right, the batting average. What happens when I'm not in my zone? My batting average falls. What does that mean for us? The probability of loss, the probability of it being an inferior entry is higher. So I won't. Yeah, great question. And I definitely won't. So that's just chasing, right? And I won't chase. It just leads to bad things. All right. Next up is trading on the weekly chart. Hey there, Tim. Do I use chart patterns like minor highs and minor lows for entries and exits? Yes, I will look at that pattern. Absolutely. I'll look at 1, 2, 3s as well, Tim. So there really are 2 patterns and only 2 patterns that I look at. And the reason I like those 2 patterns is more so than your typical triangles and head and shoulders and things that are very reliant on trend lines, which are extremely subjective. Those patterns are absolutely based on highs and lows, and I believe they're a little bit more objective than subjective. So yes, I will use them on a 2-minute, 5-minute, daily chart, 1-hour chart, weekly chart. Absolutely. All right. Next up, let's see here. So any questions from the free room? And again, gang, remember, we don't ever really want to get too consumed with what's being said. We want to look at how it's being reacted to. So most of the time, we don't always have full context for some of the comments. And in fact, much of what's going on in Sweden is going to be sort of political, geopolitical in that regard. And it doesn't really necessarily have impact on our monetary policy here in this country, in the US. So I'm less interested in what's being said, far more interested in the way that I'm going to measure. I showed you actually the 4 places, charts, and that target rate probability that I'll use to measure it. S&P, Euro, ZB, long bond, and then take a look at that target rate probability, which is actually measuring the Fed fund futures. All right, so yeah, I'm very seldom interested in what's being said, far more interested in how it's being reacted to. All right. Jay Charles says, need to send you some Alasso coffee. Oh, okay. I'm game. I'm a coffee adventure. I am liking this. It's pretty good. Smooth. Really smooth. I just finished my bag of Ethiopian coffee, which is probably still one of my favorites. But this Vietnamese blend is really good. All right. Next up, what do I think on building a position intraday, SPY options, to a winner by adding more when it's going on your side? Avi, do I scale in when a market is moving in my favor? It's interesting. If you would read futures books from the 70s and 80s, as I grew up doing when I was learning how to trade, and then you look at where some of that scaling in comes from, the futures trading books that I read in the late 80s and early 90s, most of them are written in the 60s, 70s, 80s. You could add to your position with unrealized profits in a few. So let's say you have a long corn position and you have unrealized profits that would equal the initial margin requirement of buying another contract of corn. You could with an unrealized profit. Therefore, um, inverse pyramid positioning, in other words, starting off with a very small number of contracts and increasing as the market went in your favor, was pretty popular. And it's fine, I suppose, as long as the trend goes in your favor, but realize it's a top heavy position that you're disproportionately calibrated to increasing risk from a higher high long position. So when the market moves against you, it's a bad thing because you're actually losing on more contracts with a higher price. I don't do it. I know where it comes from, and I'm not a fan of quote unquote adding to a winner. I'm actually more of a fan of scaling out. I'm more a fan of looking for trade setups that occur within the context of a trend. So just because we got in once, say at whatever stage of the trend, doesn't mean we might not have another entry and another entry and another entry. I'd rather look for another legit entry with its own target, with its own stop, with its own validity for the setup. So thank you for the question. All right, next up is let's see. When day trading, do I like to use candles as entry exits on trade levels? Do I like to use candles as in candle patterns, Robert? Not alone, not alone, but there'll be more than that. I guess that's what the question is. What makes a good entry signal? Depends on the underlying structure of the market, right? Structure dictates strategy. And then for me, having more than one why, having more than one reason. Is it a candle pattern to to your point? Is it the wave? Is it the V score? Is it the slow stow? Is it a Darvis, etc.? So I like to have more than one reason that a specific zone is likely to hold or break whatever is needed, which is why structure dictates strategy is such a non negotiable in my approach. All right, next up, uh, when you're anchoring a VWAP on the daily chart, oh, where am I anchoring? Yeah, DC, I still have mine, as you mentioned, going back to the beginning of last year as well. If I'm going to move it, I've been thinking really, I'm looking at my calendar here. Um, I am looking at probably the end of this week or the beginning of next. So usually mid-month. So I've got a couple weeks of price action before I'll re-anchor to the first trading day of the year. Yeah, you got it. All right. Can I explain my two chart patterns again? Joseph, that's a pretty big question. But what I would say is check out countdowntrader.com. Over at countdowntrader.com, we've got articles on the Dow 123, which is the one pattern that I like. And I do believe we have the minor high, minor low pattern. So you can check that out in terms of what those two patterns are, the context of using them. They're pretty good write-ups. Trish does some great write-ups over at Countdown Trader. So if you've never checked that out, gang, I leave this here on the screen because it's got some really excellent write-ups, not only on the environment and some of the tactics that I'm using for the current environment. So it is timely. But then we have more evergreen classic conversations like what is a Dow 123 reversal and how do I trade it? Or what is, what is a minor high, minor low? And I think all of those are covered there in countdowntrader.com. All right. Next up is Qualcomm. Sure. Hey there, Mr. Walker. How are you? So Qualcomm. Let's see here. You know what I do like? So yeah, let's open up Qualcomm a bit and talk about what we do like here on Qualcomm. What's interesting about Qualcomm is it's in chop. So let's take that first. It's in chop. It's trying to go bearish. So what I would say, Mr. Walker, if you are going to look at other stocks, hanging out with Qualcomm, the first thing that I would recommend is, do a reverse search and then look for the stock exposure, where is Qualcomm weighted, and then you can look at the ETFs that are part of that conversation. So that would be the place that keeps coming up, and I'm making sure I'm not missing any cool ones, Yeah, the place that keeps coming up for me is probably the same place a lot of you are thinking, which is Rog. Let's take a look at the SMH. I agree. So jumping on over to the SMH, we're going to see what else within that group might be better clarity, right? Is it Qualcomm that's going to give me the best clarity? There's a lot, and it depends on if you want to be bullish or bearish, right? It also depends on if you want to be a buyer or a seller. If you want to be a seller, NVIDIA, Analog, Qualcomm, that'd be at the top of the list. If you want to be a buyer, pretty much AVGO mostly, and arguably only. And then I'd go down to secondary tiers of where I'd look for strength. And really one of the easiest ways to do it, and I know we've talked about this in Charts and Coffee before, is making sure I know where price is in relation to the 200 propulsion, that 200 exponential moving average, and the cross of the 8 exponential moving average. So then the next layer would be, where am I above that level? And that's going to incrementally give me a bullish to bearish watch list. Remember, gang, when we're building watch lists, we really should build 2 to 3 different watch lists. Bullish, stocks that I want to buy, or ETFs or futures I want to buy. Neutral, ones that are trading within a range. I could be a buyer at the bottom of the range, a seller at the top. And then bearish, which charts, which symbols are indicating the most likelihood for downside follow through. So I don't believe in one watch list. I believe in arguably 2, if not 3. And then we want to think about, is this the best example of what it is that I'm looking for? Bullish, bearish, or neutral. So ABGO would be tricky in that regard, right? Qualcomm would be tricky in that regard. We have a related question with ABGO, saying AVGO put out negative news yesterday. David, I'll tell you what, if that's all AVGO did this morning, and we're actually trading at 575 this morning, it took the news pretty well, or it was already baked in at an earlier date for whatever reason. Interestingly enough, for now, AVGO is still holding its own. Yeah, so if there is negative news, it's not enough to sort of undo the uptrend or create a significant pullback. I mean, take a look. Here's AVGO right here on the 1-4 candle, right? And then here's AVGO on 1-6, and then here's AVGO on 110, right? So let's move it all the way to the right edge, and it's still holding its own. It's still holding its own pretty well. So that might be a good opportunity for buy the dip. Yeah. JR, can options be traded before 9:30? Futures, yes. Stocks and ETF, not really, right? But futures, yes. All right, next up, Archer Daniel Midland, long at 85. And a yellow trend, oversold stochastic. Price anchored VWAP. Place validity below the 1.5. Yeah, I like that. I wish that the 200, the white dots here, had done a more admirable job of holding price, but there's some good gravitational pull there. DC, good eye. I would be okay with that. And that's low risk, right? That's pretty low risk. If you want to put a price-based stop, because maybe you're buying the shares, which is perfectly fine, I agree with you. If we're using options, I would probably give this 25% premium risk. And that's where I'd be at on Archer Daniel Midland. Good stuff. Good stuff. I would definitely say that as we're looking at the environment we're trading, please still focus on where we can find trends, where we can find some clarity, where we can find some directional bias. That's going to go right back to the tops tools, gang. It's going to go back to grab candles, wave, market structure, all these things that are part of the top system. And if you haven't already, pencil in March 4, gang. It's around the corner. We're just over 2 months away. It's going to be the first class of the year, but we will be talking a lot about market structure and how I measure it using dynamic levels like the wave, how we're also upgrading the wave to be a little bit more reflective of volatility. So cool stuff. All right, gang. So as always, thanks for joining me for Charts and Coffee. Jimbo, I just saw your question come in. GILD. Yeah, let me answer that one real quick. And GILD, buy the dippable. Yes, let's be a little bit more conservative about it though. Yeah, a little bit more conservative, meaning middle line of the wave, maybe bottom line of the wave. And if you really want to be extremely conservative, how about 81.80 for a long call or long stocks? All right, gang. Be good to each other. My futures folks, my Sector Secrets Mastery folks, I'll be seeing you all shortly. And in the meanwhile, check out Countdown Trader. A lot of great information there. And I will talk with you all tomorrow. Same time, same station. Be good to each other, gang.